Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, September 21st, 2009. Well, folks, we are seeing a down day on Wall Street across the board, although it's not a big down day, just kind of one of those middle ground days on the Dow, with the Dow down about 50 points on the day, or about 0.5%. NASDAQ is flat, and the S&P 500 down about 5 points, or 0.5% as well. So you're seeing a little bit of a down day on Wall Street. And again, the one thing you have to look at first of all, folks, is the dollar. The dollar continues to be a driving force behind whatever direction this market's trading. Now, it's interesting because we isolated some key levels late last week and all of last week that really dictated that today should be a down day in the markets. And I'm going to quickly go into those. Then we'll go into the dollar facet. But I want to talk about the technicals of this trade because I think it's really, really important. Now, first of all, what we talked about last week were some trend lines. There were some trend lines that we talked about needing a close below to see some more downside in this market. And they were 3 lines last week, all in the general same area. Going back to Thursday, here's Thursday of last week. And what I want to show you here is, you see the blue trend line and the pink trend line? These are two trend lines that dictated major trends upwards last week and the week before. So really scanning back to 2 weeks. In fact, I can show it to you on the 60-minute right up here, how this down here started, and you can see the trend. It was a very, very steep trend line all the way up. And those lines dictated very, very nicely the levels to watch for a possible breakdown in the market, or tell us when we got to close below both of them, there would be some more downside. And I want to show you back on the 10-minute chart. We were just looking at the 60-minute, but you can see this blue line really was the key, because you didn't get a close below this blue trend line all week, even the week before last week, until we got to Friday. And you can see right here how this pink one we closed below on Thursday, but then look at this little green candle late in the day, surging up, closing right above the blue trend line. And that, again, was a stationary hold of a major support trend that dictated you won't have a fall yet on the markets. Now, the other line we were watching was 107. See how the white line here at 107 cuts across and is a major master level we had talked about into our premium subscribers for days and days, if not weeks and weeks, that 107 level. Those of you that are research center guys and chat room guys, you remember how many weeks in a row, probably about a month or so, I harped on that 107 level until we finally got there. But what I said basically was, let's get a close below the blue trend line and the pink trend line here, and get it below also the white. So this whole area, you needed to see a close below. And last Thursday, we actually rallied back up, closing above the white trend line, and actually just above the blue, so you had no break. However, Friday, look at Friday's action. Down, up, down, up. Ultimately, what happens, we're hovering right on 107, going into 3 o'clock, we're above it, 3:30, right about 3:30, we are above 107, and then all of a sudden, sell, sell, sell. 30 minutes of selling, 3 candles of sell-side action in Friday's action took us below the white trend line for a closing point below that line. Now, all of a sudden, you can see we're below the blue, below the pink, and also now below the white. That is a signal we talked about as being a direct signal we would see selling come in on Monday, and sure enough, profits galore there. Again, all you had to do was notice that you closed below there. We harped on it in the Research Center videos and to the chat room, and the market did tank down here this morning. Nice gap down of about 75. We were down as much as 90 points on the Dow. You had a nice push up on the dollar as the dollar started to collapse down middle of the day from the gap up, and then you kind of went sideways as the dollar came back down. Now you're getting a little bit of a pop again. But again, to repeat and repeat and rinse and repeat here, it's the dollar in essence, but also the technical lines are dictating the overall market direction. The dollar is just going in that same direction to give us the opposite move in the market, all right? So, again, you can see how the call worked there. Understanding the trend lines. When you isolate a master level and 2 major trend lines, if you can get below those, you're going to see selling, and that's exactly what you've seen today here. SPY, again, trading down as much as close to $1 here, about $1 earlier, coming all the way back up and then coming back down here recently over lunchtime. Now, volume is pretty light in this market, folks. You had the holiday starting Friday evening. It's kind of extending here to the Monday of this week. We're really waiting on the Federal Reserve. The Federal Reserve will meet and give us their policy statement, the FOMC statement, on Wednesday at 2:15 p.m. Eastern Time. That will be a major point in this market. So again, expect lighter volume today and tomorrow until Wednesday, and then you should get a lot of volume in this market Wednesday when we get a little direction out of the Fed. What are they looking to do? Strengthen the dollar, weaken the dollar? I think we all know they're ultimately trying to weaken the dollar to prop up the economy. Whether that's good or not for us as individuals, well, we all know that's bad for us as individuals, but That's what they're trying to do nonetheless. In any case, what you want to just watch now is the dollar action here over the next couple days. And I want to show you here, folks. You want to also watch the 107 level. You do not want to recapture that 107 level. That needs to be stayed below to continue to see some weakness in this market. If you are able to recapture 107, you start to look for the highs at 108. Again, a little over 108 on the SPY. If you can stay below 107, look for more downside to come in this market today and possibly tomorrow as well. But keep an eye on that 107, this white trend line on the SPY. Now, as I mentioned, the dollar's been a key driver of this market over and over again, going all the way back to March when the dollar topped out, and that just happened to be when the markets bottomed out. And they kind of have gone inverse. The dollar's gone like this, and I'll draw some trend lines in here to give you guys a good sense of the direction here. You've seen the dollar go down like this, and the markets have gone like this. Here's March. And right here is March as well, and you can see they've gone in inverse. So obviously they matched one point in the middle here, but nonetheless you've seen the dollar decline. That's propping the markets up in a direct inverse move in the markets. Now today I can show you that beautifully on the charts. Check this out. Dollar gaps up. What happens to the markets? We know we gap down. So the markets go sideways for a little while, about an hour. We see the dollar going sideways, so do the markets on that gap up. I'll show you that again. So remember, dollar gaps up and goes sideways for an hour. What do the markets do? Let's go back to the spiders. The markets gap down and go sideways for an hour. Then all of a sudden, you see the dollar, go back to the UUP chart, start to collapse. Big drop on the dollar. What happens to the markets? The markets start to rally all the way up. We shoot all the way up to the 50 moving average. At that point, what happens to the dollar? You can see the dollar again going back to the UUP gently starts to go back higher, gently floating back up. And what do the markets do off of that? You can see they gently floated down here on light volume. So it's tick for tick, and I mean that, folks. You're not BSing here. This is absolutely what's going on. This market continues to be one-on-one correlation, well, in the opposite direction, obviously, into the inverse of the dollar. Markets inverse to the dollar, one-to-one correlation, tick for tick in the opposite direction. That's simple, folks. Watch this. It's so important. I can't stress it enough. Unbelievably important to watch this market right now. All right, folks. Again, keep an eye on the Fed on Wednesday. We'll keep you guys posted, but you guys know the levels now. Really, you're watching 107. If you stay below 107, you should be able to fall more. Ideally, you want to see a close below the 200 intraday here on the moving average on the intraday. If we can go retest the lows or close within earshot of the lows, that would be an extra bonus, as that would show some possible changing of character in this market. Stay tuned. Come join the research center. Come join the chat room. We will talk to you very shortly. Take care.